All right, good morning and happy Wednesday, guys. Sorry for the problems there. All right, quick sound check. Make sure we are rocking and rolling. Good morning, Miss Claudia. Good morning, Russ. Yeah, it's Microsoft's fault. We'll blame Microsoft. But all right, guys, big day ahead. We had earnings last night in Amazon, AMD, and SMCI. And then today around 2 o'clock, we'll hear from JP and the Fed. Before we jump in, though, I want to share a quick video. I'm sure you've all heard of Mark Douglas, and he is the godfather of trading psychology. So, really good seminar here. Let me grab the link for you, and I'll put the link in the chat. Let's see, Mark Douglas seminar. I'll drop the link here on YouTube. Good morning, Keith. Mark Douglas seminar. All right, so if you haven't watched that, I highly suggest you do. And as we all know, right, psychology is 95% of the game. So I want to show you my notes from yesterday. And I think for better or for worse, you want to take your daily notes. Write down a good recap of what you did good, what you did wrong, and the things you want to fix. So my notes from yesterday, the good, I had a great entry in CGC breakout. This morning, the calls are up about 300%. A little bit of good and bad with that one. The good was I took the trade. The bad was that should have been an alerted trade. So I've got to stop cherry picking. I had an Eli Lilly earnings trade that hit max profit. We've got a call credit spread on the S&Ps, and I held that. Never broke above the key level. And this morning, that call credit spread is going to bring in some nice profit. I put on a short on the NQ with a good risk-reward entry, and I fought the temptation to fix my earlier mistakes by forcing revenge trades. So that was the good. The bad, I added Tesla calls like 10, 15 minutes after the open, and that was just purely an impulse trade. So I wrote down, was there an A+ setup? No. So what the heck am I doing? I am not better than my indicators. And then NVIDIA here, we got some call debit spreads on NVIDIA. At the high of day yesterday, they had a decent profit. I held that risk into major earnings. I held that risk into Fed. So for that, I am a stupid ass. Remember, the goal is to grow the account, not to catch all of the move. The traders in the room just want profitable trades. I also had a trade on SMCI, another call debit spread, and very much like NVIDIA, at the high of day, I had some good profits. And I did not take them. So the good and the bad, and the goal for today, take A+ setups in alignment with the signals. Stop thinking and stop trying to get cute. So yeah, for better or worse, take your daily notes. And for the market here, S&P futures down about a quarter, NQ down about 0.5%. And we had some earnings last night. So Amazon here, Amazon's up about $4. Not breaking any records, not breaking any rules. No audio. Okay, can you hear me now? We're off to a rough start. Okay, Jesus. All right, so as I was saying, let me do that all again real quick. If you haven't already, check out the webinar here from Mark Douglas. Really good webinar on trading psychology, which, as we all know, is like 90% of the game. And then I was reading off my notes from yesterday, the good and the bad. The good was I took a good trade in CGC. I had an earnings trade in Lilly. We've got a call credit spread on the S&Ps in the Mastery, and we held on tight. And that should bring in some profits here today. I added a short on the NQ with a good risk-reward entry, and I fought the temptation to fix my earlier mistakes by revenge trading. The bad, I took a trade on Tesla, and it was nothing more than an impulse trade. All right, no A+ setup. I've got some call debit spreads on Nvidia, and at the high of day yesterday, they had some decent profits. Did I take the profits? No. I held that risk into major earnings and the Fed. So therefore, I wrote down stupid ass. The goal is to grow the account, not to catch all of the move. The traders in my room, they just want profitable trades. And I did the same thing on SMCI. Had a call debit spread, had some nice profits, and I did not take them. So the goal for today, take A plus setups in alignment with the signals. All right, stop thinking, and I am not better than my indicators. The good, the bad, and everything in between. But all right, for the market here, we had big earnings last night, and Amazon's up about $5. So not bad, not great. And then AMD here, down about $8, and they're going to open up around the 150 level. So a little bit of sinkage for AMD. And then SMCI, the star of the show, down about $80. Going to gap down to about 775. So from here we have Apple on Thursday, and that's pretty much it for big earnings. We'll hear from Nvidia, I think, towards the end of the month. But yeah, as far as your big tech stocks, Netflix was not that good. Netflix took a dumper. Meta took a dumper. Amazon up a little bit. Microsoft had a nice gap up, and they gave it all back. And then Google. Google was the only good boy. Very nice gap up. So now the $1,000,000 question is, where does the market go from here? And we had a pretty big flush into the close yesterday. As far as the signals go, everything points towards the path of least resistance being to the downside. And frankly, it's a pretty classic pattern. Big daily squeeze. They break it short. We get the first leg to the downside. They rally back into the falling 21 EMA, and they spank it lower. S&Ps, same exact thing. Big daily squeeze. They break it short. They bounce it back to the 21 EMA. They bounce it back into the 50, and they whack it lower. So a couple of key levels for you. For the S&Ps here, 5150. If we're under 5150, in the context of a daily sell signal, I think much easier for the market to go lower. And then the level here for the QQQ futures, the hourly 200. So pretty much the same level for both of them. If they can pop it back above H200, stabilize it, get a few lower time frame buy signals, then they can try to work on taking it higher. If they can't get it back above that hourly 200, I think pretty quickly we could head back down towards those recent lows. And a big part of the path forward might come down to the Fed today. So as far as my open trades, we got a call credit spread on the SPY, and I like that trade for obvious reasons. We've got the May expiration 515 call credit spread, and I'm pretty content holding that trade so long as the S&Ps are below the hourly 200. From here, if we go down and make a brand new low, we're going to get a nice chunk of that max profit. So I like that trade. And then for the Nvidia call debit spreads, again, I don't think it's going to be an Nvidia problem. It'll be a bit more of an S&P QQQ problem. But I think it's a matter of whether or not can Nvidia hold that 850. 21 EMA at the 850. If they can hold it, try to get a bounce going. And then more importantly, we get a bounce in the overall market. Between now and Friday, they could work up towards 890, 900. Frankly, it's not a big move. It's about one average true range. But it'll come down to the market. If they can hold 850, I'm going to give it a fighting chance. If they break 850 and the market is puking, I shall take off that trade. And then we got some calls here in energy, which to be honest, I want to buy a few more of. I think as far as the sectors go, energy is one of the best, especially here off the monthly chart. If you look at XLE, if you look at ExxonMobil, EOG, Bolero, Oxy, and a little bit of Chevron, they've got these beautiful monthly squeezes. Now, the only tricky thing about the monthly squeeze, it can be a little bit like molasses. Right? They're not the fastest. So you take XLE here. We have okay, monthly chart. We have a squeeze target of about 105. In most situations, you're not getting to 105 overnight. You're not getting there in 5 or 10 days. A monthly squeeze, that can take anywhere from 3, 4, 5 to 6 months. The other thing about a monthly squeeze, before they fire it, before you go hit that target, you might sit through some pullbacks in your lower time frames. You might sit through a pullback on the weekly chart. You might sit through a pullback on the daily chart, etc., etc. So I've got the 105 calls for August expiration, giving myself a good 3 months, and I've only got half my position size. What I would like to do here, I want to buy a little bit more down here at that daily 50. If they can take it down to that daily 50, if they can find a good hold to support, I want to buy a few more of those August 105 calls. And then as far as the next trade idea, at the moment, I'm leaning a bit towards shorting the next bounce. That could be a bounce into the hourly 200. That could be a bounce into the daily 21 EMA. Frankly, it might be a bounce all the way up into the daily 50. So I'm long NVIDIA. I'm long energy. I am short the S&Ps. And today I'm going to be patient. I'm going to be disciplined. And we'll see what's up here with the Fed. And then as mentioned on Thursday, we'll find out what Apple has in store for earnings. And for the most part, going into earnings, it's not a great chart. Pretty neutral. Big 3 score, -3. No buy signal, no sell signal. Structure is not bullish, it's not bearish. I don't view that as a great setup for a long or a short. And then the only other thing I think worth mentioning, the pot stocks. Very big move yesterday. So CGC was up about 80%. There was a big pop here in Tilray. Now, these can be very spastic, meaning they can go up 20%, they can go down 50%. But take CGC, for example. Big breakout. Daily squeeze fire to the upside. What I would look for from here, lower time frame squeezes. For conversation's sake, if they want to take CGC from 14 to 15, 15 to 16, 16 to 17, etc., along the way, a lot of your 15-minute, 30-minute hourly squeezes, they should fire in the direction of that trend. I don't want to buy it up here for a swing trade, so to say. It's a little bit extended. But again, if they want to keep the party going, 15, 30-minute hourly squeezes, they can make for a nice spot to buy some out the money calls, if nothing more than a day trade. So I am going to keep an eye on that. But more importantly, Mama and Papa market, S&Ps and the QQQ. And then I gave you a couple levels of resistance. Let me give you a level of support. The weekly 21 EMA. Very, very, very important level of support. On the NQ here, they broke it initially. They popped it back above. And now this morning, we're testing that level. Notice down here on the histogram, we got that momentum break. For the first time since November, momentum shifts in the favor of the bears. When momentum shifts in the favor of the bears, and we take out major support, that can definitely open the door for a much bigger flush. So my thinking is, all right, if the bulls are going to play any kind of defense, they've got to play defense here at the weekly 21. So call that 17,500 on the NQ. And then the same level on the S&Ps is a little bit lower, around 49.50, we'll call it. And you'll also notice, for the first time since November, the big three signals have shifted neutral. They were neutral back here. Then we got the buy signal. Then we got the big push. Now we're pulling back a bit, and we lose our buy signal. So very much like the NQ. If the indicator goes from bullish to neutral, if we get a momentum break, and then we take out key support, then the market can go much lower. If they're going to play defense, they've got to play defense back at that 21 EMA. So support is your weekly 21, and I think a good level of resistance, the hourly 200. Back above the hourly 200, the bulls have got a fighting chance. Below the weekly 21, and I think you look out below. But all right, folks, that is that. Any questions, anything y'all want to take a look at, throw it at me here in the chat. And I am ready for what should not be a dull day by any stretch of the imagination. Let me check for a few lower time frame squeezes. Nothing on the NQ. The NQ is squeezeless. See, S&P futures. Nada. Nada in the form of a lower time frame squeeze. So keep an eye out for that today. The first 15-minute, 30-minute, 5-minute squeeze, anchor to that, and that can give you a little bit of clarity as far as, all right, are we going to pop? Are we going to roll over? And all the above. But they're trying to pop it a little bit here. We got a fresh 5-minute buy signal, a little bit of ammunition. But I think it is all noise under the hourly 200. All right, good morning, Les. Bitcoin. Yeah, let's take a look at Bitcoin. What is going on in the Bitcoin world? Down about 2%. So I would think from here, and again, like most things, it'll come down to the market. And the market might come down to the Fed. From here, there might be a path into about 5,500. You got a little break in structure. 21 EMA crosses under the 50. We've got a negative shift of the ATR trailing stop. The squeeze fired short. And we've got the early sell signal. Early sell signal on the daily. And the official sell signal on the 4-hour, 2-hour, and the 1-hour. So you've got compression, right? The squeeze gives you compression. And then the signals would suggest path of least resistance at the moment is to the downside. When those two things come together, you look for a move down to about -2.5 to -3 ATR. -3 ATR lines up with 5,300. And then let me check the hourly here. Yeah, so notice how they're taking that 21 EMA and they're riding it lower. every pop into it gets rejected. I think for Bitcoin to stop the bleeding, they've got to get it back above that hourly 21. So that is Bitcoin. And then Briggs. What's up, Briggs? Always good seeing you. Tesla. Tesla. So it's a little bit of both. A little bit of good and a little bit of bad. The good would be they are making progress here on the daily chart. It's far from perfect, but progress is progress. We have an early daily buy signal. They've got it back above the 21, back above the 50, back above the trailing stop. There is a 4-hour buy signal and a 2-hour buy signal. And you had that huge move on Monday. And I think, frankly, the pullback, not all that out of the ordinary. Huge gap up. It gets a little bit cooked. So far, they're pulling it back to an hourly 21. I think the key for today, can they defend the hourly 21? If they break it below that, you take into consideration the weekly chart. The weekly chart is still a hot mess. Structure is broken. We got a sell signal. And a pretty clean rejection here at the weekly 21. Big flush, nice pop, and a little rejection. So step one for Tesla, can they keep it above the hourly 21 EMA? More importantly, step two, can they get it back above that weekly 21 around 190? I think a really, really important level. If they can get it above the weekly 21, then they can take that early daily buy signal and potentially do some good things to the upside. But bigger picture, respecting that weekly chart, under that 21 EMA, nothing's really changed as far as the bigger picture here. So step one, defend the hourly 21. Step two, get it back above the weekly 21. If they can do that, they got a fighting chance. Hey, good morning, Mike. So my SPY position is a May 31st expiration, 515, 517 call credit spread. So I'm short the 515 call, which basically means if we dump from here, I'm in great shape. If we go down slowly from here, I'm in great shape. If we go sideways from here, I'm in great shape. And even if they pop it, if they can keep it under that daily 50, I'm going to be in good shape. I'm in trouble if they're taking it back above that 515-ish. So 515 call credit spread for May 31st. All right, good morning, folks on YouTube. Yeah, go Browns. Go Broncos and Browns. So I'm a Broncos fan, but my brother Chandler is a Browns fan. So I got a little spot in my heart for the Browns. I went to a Browns versus Jaguars game last year in Cleveland. That was a lot of fun. And they got the W. All right, Michael. Are my indicators part of the new squeeze indicator JC's been speaking about? Okay, good question. So, no. So my squeeze indicator is a little bit different than JC's. I know JC's got the Squeeze Pro. He's got the triple squeeze. Mine's a little bit different from a compression standpoint. On the Squeeze Pro, you have 3 different levels of compression, right? You've got the low compression squeeze, you've got the mid compression squeeze, and the high compression squeeze. The big 3 squeeze, it's what I would call the sweet spot between the low compression and the mid compression. And then the other differences are the momentum histogram. That's based on a custom MACD. So that momentum line is a MACD line. And then we got the buy signals and the sell signals plotted on the squeeze histogram with the orange, the blue, the green, and the red arrows. So it is very much built on the foundation of the squeeze. but a little bit different than JC's, and yeah, not part of his package. The Carter package. Good morning, Anders. Always good to see you. When I choose out the money contracts, when do I choose out the money versus at the money or in the money? Great question. Great question. So, more often than not, I'm going to buy the out the money options. I'm looking for one of two things. One, a bigger time frame squeeze. That could be a weekly chart or that could be a monthly chart. Or I'm looking for a nested squeeze. So I think my favorite example from this year is Best Buy. And again, what is the squeeze? It's compression. It's a buildup of energy. When the squeeze fires, you get the expansion, the release of the energy. So I think a great situation to buy the out the money options is when you have 1, 2, 3, 4, 5 different squeezes all setting up at the same time. So for Best Buy here, we had a 4-hour, a daily, a 2-day, a 3-day, and a weekly squeeze, and they all had a buy signal. So that's 1, 2, 3, 4, 5 different time frames building up energy, and all of them call for a move higher. So we call that a nested squeeze. First, the 4-hour squeeze fires. When the 4-hour squeeze fires, that can trigger the daily squeeze. When the daily squeeze fires, that can trigger the 2-day. When the 2-day fires, that can trigger the 3-day, so on and so on. So what you can get in that situation is a big move. One after the other, all those squeezes fire, and they release all that energy. In that situation, I really like the out the money options. If I can buy the out the money calls before the first squeeze fires, so in this case, the 4-hour squeeze, if I can buy the out the money calls before the first squeeze fires, I'm getting them nice and cheap. And then one after the other, as all the squeezes fire, the gains come through pretty quick. You're kind of catching that double whammy. The calls gain value because one, the stock is going higher, but in a lot of cases, you're also catching the pump in implied volatility. The market makers, right? They price the options based on the expected move. What the market makers are not taking into consideration is the squeeze. And what the squeeze can give you is a much bigger than expected move. So you're buying them for a discount, so to say. And then when the pump comes through, they quickly gain that value. Now, say instead we had just a daily squeeze. Just a daily squeeze all by its lonesome. Then I'm thinking a bit more at the money or in the money. If the at the money, in the money options are a bit too expensive, then you can do a call debit spread. You can do a butterfly. You can do a put credit spread. But to be frank, more and more, I do lean a lot more into the out the money options. The reason being, like LMT, for example, where if we're looking at LMT last week in the daily squeeze, the target at that point was about 470. And my thinking is, hey, if the squeeze works, if it all works as advertised, I want to get a good bang for my buck. I can do a put credit spread. That'll feel a little bit safer. But if I can do something a little bit out the money, somewhere near the upside target, if the squeeze does work, I'm going to get a nice bang for my buck. But again, I think as far as the squeeze goes, the more, the merrier. The more, the merrier. No, Esmore, I think we're having audio problems in one of the simpler rooms. Not here on YouTube. And the audio problem is I forgot to turn my microphone on. Funny, funny how that works. But all right, y'all, cash market opens in 4 minutes. I got to heat up my coffee. I got to stretch out real quick. So I'm going to let you go. And I'll be back tomorrow on the YouTube channel. Same time, same channel. So as always, thank you for your time. Much, much appreciated. Those of you in my room, I'll see you at 10:30 a.m. Central. We are short the S&Ps. We are long NVIDIA. And we are long energy. So the good news is, if the market collapses today, we'll take an L on NVIDIA. We might take an L on energy. But that good old call credit spread should help soften the blow. Have a great day, y'all. Talk to you soon.